Hey YouTube, in this video I want to take a look at two stocks that have caught my attention. One is Adobe and one is Salesforce. I actually own one of these stocks, Adobe, for both my Project 1 Million portfolio and my etoro fund. Both of these stocks seem good long term, but I feel more comfortable with one of them. But let's take a look at these two stocks in deeper detail. For me, Adobe is a somewhat easy stock to understand. It generates about 70% of its revenue from its digital media segment, which houses its creative and document cloud products. The Creative Cloud includes over 20 apps for photography, video, and web design, and generated 87% of the segment's annualized recurring revenue. So when you're thinking Creative Cloud, you're thinking of products like Photoshop, Adobe Premiere Pro, and a few other Adobe products. These are usually the best-in-class software design products and are used very widely. These products have a learning curve, so once you learn them, you will want to stick with them because you wouldn't want to learn different kind of photo editing software or video editing software. So that gives it some moat and some stickiness. The document cloud probably consists of PDF, and we all use PDF documents, so we're quite familiar with that. For most of us, we use the free version of PDF, but there are also many paid add-ons to PDF. The digital experience business is a newer segment for Adobe, and it is its attempt to grow beyond the stable digital media segment. Here it has enterprise-facing analytics, marketing, and e-commerce tools. For example, Magento is similar to what Shopify offers. It also has another brand called Marketo, which offers marketing analytics. In general, I find Adobe's business easy to understand, and I can also identify a moat. Given that it takes some time to learn some of these products, and that many of these products are actually taught in universities, these products will likely be the market leaders for some time to come, especially in photo editing, video editing, and document cloud in terms of PDF. That gives the business a lot of stability and gives me a lot of peace of mind. But Salesforce is no pushover either. Salesforce is the world's largest CRM company. It has a solid recurring business, and its subscription and support revenue accounted for 94% of its top line. Salesforce has four main segments. The Salesforce CRM platform, this is probably what it's most famous for. And Salesforce has also been going on an acquisition spree, so it's been buying a lot of other companies and now can offer other services as well. It also has the Sales Cloud and the Service Cloud and Marketing and Commerce Clouds. Given that it can offer so many products, it bundles these tools together into its main CRM platform to widen its moat against rivals like SAP, Microsoft, and even Adobe. I do see a moat for Salesforce as well. Once an IT company or the IT department within a company decides to engage Salesforce for example, hosting a CRM platform, and since it provides a very good quality product, it's very likely that the company will stick with Salesforce for a long time to come. And once it has used its main CRM platform and become comfortable with it, it will likely also want to try out the other offerings from Salesforce. For example, other cloud services. But I don't think I understand the product as well as I do for Adobe. I feel that there is more competition as well in this CRM space. Even Microsoft has a pretty big CRM business in terms of Dynamics 365. And I don't want to have a giant competitor like Microsoft breathing down my neck. Both companies are growing relatively fast. Adobe's revenue and adjusted earnings rose 24% and 16% respectively in fiscal 2019. And in the first quarter, which ended on Feb 28th, Adobe's revenue rose 19% again, and its earnings grew even better, 33%. In terms of a deeper breakdown, Adobe's digital media and digital experience revenue grew 22% and 15% annually, respectively, in that first quarter. The businesses didn't really face much headwinds because of the COVID-19 pandemic. In fact, most of the services Adobe provides are digital services, so they can be accessed quite easily, um, even in a work from home culture. Given that I feel that work from home trends will continue for a while at least, it's good to have a business that can ride out the fear over the virus. In the second quarter, Adobe expects its revenue and earnings to rise by 16% and 28% annually, so still very good growth rates. Salesforce also has good revenue growth rate. Salesforce revenue and adjusted earnings rose 26% and 79% respectively in fiscal 2020. But I feel that Salesforce revenue growth rate is a bit misleading because it does include a lot of acquisitions as well. So not a lot of it is, or not all of it is organic. So Salesforce, like Adobe, doesn't expect much disruption in its business, except maybe perhaps in some industries like the airline, hospitality, and maybe some Chinese customers. For the first quarter, Salesforce expects its revenue to rise 30 to 31% annually, but for its earnings to dip 24 to 25%. That's likely because of a one-time bump in its earnings last year due to investment gains. We can read about that over here. And for the full year, Salesforce expects its revenue to rise 23 to 24% and for its earnings to grow 6%. So also very healthy growth rate. So both stocks have good growth rates. But it seems that Adobe trades a little cheaper right now. Adobe trades at 39 times forward earnings while Salesforce has a forward PE of 56. As mentioned, Adobe also generates stronger earnings growth and is consistently profitable by GAAP measures. And it even regularly purchases its shares with excess cash flow. Salesforce isn't consistently profitable by GAAP measures, especially due to a lot of acquisition costs, and usually doesn't buy back any shares. More importantly, I think Adobe has a stronger competitive advantage. It's Adobe's digital media segment doesn't face much direct competition. Salesforce arguably faces more direct competition in the CRM market, as I mentioned, from players like Microsoft. I agree with the author here, and I will also probably choose Adobe. And in fact, I have chosen Adobe for both my Project 1 Million portfolio and my etoro fund. I also like taking a look at Glassdoor ratings as an alternative metric to get more insight into a company. So let's take a look at Adobe first. So these are ratings by the employees working in Adobe. So they will probably know a lot more about the inner workings of Adobe than me. So I'm quite pleased that 95% approve of the CEO. In fact, I like the CEO as well, and I've seen interviews of him, and I think he's a capable guy. I like that the employees, and the vast majority of them, have a positive business outlook as well. Overall, Adobe ranks quite well with 4.1. Salesforce also has very good ratings. 96% approve of the CEO, an even higher number have a positive business outlook. And overall, it has a higher rating than Adobe. Let's also take a look at a few other metrics. So as mentioned, Adobe has a lower price to forward earnings ratio than Salesforce. But that's not the end of the story. Look at Adobe's price to sales ratio. This is about 15.83, whereas Salesforce has a price to sales ratio of about 8.78. On a price to cash flow basis, they seem pretty similar. Adobe is about 38 and Salesforce is about 34.64. So I wouldn't say it's a foregone conclusion that Adobe is cheaper. In fact, Adobe may even be considered more expensive. I particularly like the price to sales ratio because earnings can be a bit misleading and they can even be inaccurate sometimes. Let's look at some other operating metrics as well. Adobe has very high returns on invested capital of about 22%. It has very high gross margin, about 85%, and an equally impressive operating margin of about 30%. Salesforce tends to invest a lot, especially in the recent acquisition spree it went on, so its return on invested capital is not very high. It has good gross margins, about 75%. But again, as mentioned, due to the acquisition spree, the operating margin is not very high. So over the last 3 years, the annualized growth rate for Adobe has been about 24. That compares to 26% plus for Salesforce. Adobe seems to be in a slightly better financial condition. Its current ratio is about 1.23, while Salesforce has a current ratio of about 1.08. Finally, let's also take a look at the projected revenue growth rates for both companies. So for Adobe, in the next quarter, it expects to do about 15.80%. For the current year 2020, it expects to do 16.30%. And for next year, it projects to do about, or rather analysts project it to do about 15.80%. So you can see that its growth rate is very stable. And I expect this to continue for some time to come for Adobe because of the stickiness of its product, and also because it's an innovative company and it continues to come up with new products. Let's take a look at Salesforce as well. So we don't have a projected growth rate for the July quarter, but for current year 2021, it expects to do 21.5%, and next year it projects to do about 19.50%. So good growth rates as well. But I think, as mentioned, some of these growth rates are inorganic growth because of acquisitions. So I am continuing to keep an eye on Salesforce, even if I already own Adobe. And let's see if Salesforce becomes available at a very attractive valuation. I may even decide to buy some shares or at least sell a put option on it. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.